my Reits friends and investors, last week ESR Reit did the first successful placement of equity fundraising, raising 455 million shares at 33 cents. Guess what? This is the first placement for this particular year, and this is the only the third placement in the last 2 years of the Singapore REIT market. Now, all in all, it is noteworthy that the last 23 placement, private equity, by real estate investment trusts in Singapore have lost money for investors, with the exception of one. That means the last 23 placements, only one have managed to make money for investors in the last placement based on the prices as the latest versus their placement prices. For more of this, do look at GCP Global website as we talk about institutional placement. But the key thing about this is that what does this placement by ESR, successful placement by ESR, indicate? For you, the REIT investors, this is what we are going to find out in this week's video. Thing you may ask, ladies and gentlemen, is that the successful placement of ESR REIT, last week, is it an indication that the industry is turning around? Is it an indication that the real estate investment trust market is turning around despite higher expectations of interest rates, as you saw from Federal Reserve and the latest numbers from the labor market in the US, as well as actually the inching upwards of the 10-year Treasury bond? Or is it actually more idiosyncratic to ESR REIT itself? Well, first and foremost, let's go through all three of that. One is essentially, what about ESR? Is it idiosyncratic risk? Well, this first picture actually shows our latest lunch with the management of ESR. As you know, ladies and gentlemen, we have been supportive of ESR REIT. In our Business Times interview last year, we actually mentioned that ESR is actually and will benefit from the acquisition of logos for which they successfully acquired after our article actually supported them, based on the real return on investment capital and the EV EBITDA multiple. Now, this of course come on the heels of the unsuccessful merger together with Savannah, and secondly is that it also indicates the fact that ESR now, is the latest results, as you can see, is indicative of the kind of organic growth that most investors are looking for. So what about this latest results then? As you can see, ladies and gentlemen, the latest results of ESR REIT actually indicate, as you can see, at the DPU level, there is growth, albeit the fact that the second half, the DPU growth is actually not as exciting as it would be, which means that on a full year basis, only 3 cents, But the fact is that they still managed to grow, despite the fact that and if you compare to its peer comparables in the industrial REIT sector, you'll notice that many of the REITs essentially enunciated growth at revenue and the NPI level, but not at the DPU level. What about for ESR REIT? You notice that it managed to deliver on the growth level. Not only that, they were able to actually also do a few things. One is actually to embark on the scope of acquisition of Japan, an area that we are actually very excited about because one and foremost is that the real estate logistics assets in Japan gives about 4.5 5% yield, and based on the cost of funds, you actually uh, at below 0.5%, you get a very good comparable yield of 4%. And we are very heartened that the yen versus the Singapore dollar is essentially one of the lowest. In fact, of the G7 countries, the yen has been hammered the most in the last 2 years. So I reckon that essentially in the longer term, this continued weakness of yen cannot continue to persist at the rate in which they have been depreciated in the last 2 years. Henceforth, any buying of Japanese asset at this level or even slightly lower, in a longer term, that's in the 1 2 years, will actually present the REIT. In this case, if ESR embark on this in a greater way, I think it is a very good way to position in Japan. You see, compare this to say Daiwa Logistics, for which they came to the IPO market 2 years ago, just before the yen started to depreciate, and see what happened. Oh my goodness, you would have lost big money on Daiwa ESR. Whereas for timing is important. They went into the Japanese market last year, late last year, as the Japanese yen is already like 60% on the way down in this trajectory in the last 2 years. So as you see, ladies and gentlemen, the key thing that we've been talking about in real estate investment trust is timing. You go on the wrong timing with Daiwa, you notice that you are down since IPO. Good assets in Japan, 6.5% yield. So what? You lost big money. Daiwa actually lost for investors close to 30% last year. You go in the right timing with ESR after almost a 60% fall in Japanese yen. What happened? You're actually positive on ESR. Now, this next table, ladies and gentlemen, shows you that industrial REITs, like Maple Tree Industrial, Maple Tree Logistics Ascendus, Capital, rather Capital Land Ascendus, ESR REIT, and AIMS. These are the five industrial REITs that rebounded more than 20% from their October lows compared to their prices last Friday. And if you follow our weekly video, you notice that last Friday when we actually allude to the fact that the REIT market rebounded very fast in the last 3 months, they have gone up 90%. Probably time to take some profit. And you notice that since last Friday, that's actually 3rd of February, prices have actually come off by 6 to 7% as this table have shown. Well, so if anything, timing is or prescient timing is key in making money, making good money in the real estate investment trust, and this is why we pride ourselves as being very good for, so to speak. And of course, we can't be right all the time, but most of the time, we are right. And as what George Soros says, it's the time when you are right and you bet big, and that's when you make the most amount of money. So how to make the most amount of money in the real estate investment trust? For us, ladies and gentlemen, this is our 34th year in teaching. What we do is that, as you can see from this photo, we just had our recent launch with the CEO of ESR, Mr. Adrian Chu, and his head of acquisition, Ms. Charlene Chang. You notice that the other photograph actually shows us having lunch with Mr. Russell Ng, the CEO of AIMS, for which the share price jumped 20% from October lows. You notice essentially what we do is very thorough investigation of the REITs. We look at the template, we look at the fundamentals, we look at the acquisition, the ability to divest and make capital gains for investors. Then we counter check closely. We work with the management closely to actually see where the facts and therefore our own conclusions, whether actually in sync with what is likely to actually happen. Remember, ladies and gentlemen, share prices look ahead. So what we do in investment classes is present to you what looks likely ahead based on our conclusions from our detailed analysis, our detailed meetings with the management of the REITs, which we do and follow up closely. And then that's what we share in our class. So for more of this, ladies and gentlemen, do actually sign up for our class this Saturday. Yes, we only do our class once every quarter, and this next one will be this Saturday. And of course, in our classes, we're going to touch on the other two topics that we want to actually and have highlighted to you. Is the successful placement of ESR indicative that the REITs market have turned around? Is it also indicative that the industrial REITs sector within the REIT sector has properly turned around? Of course, in today's video, because of time constraint, we can't actually explain this in total to you, but hope that you will be able to join us and sign up for our class this Saturday. Adios, and see you for this coming next week's video.